Hey there, YouTube family, it's Stocks with Josh. Hit the like for me, say hi in the comment section. As you guys can see, I'm still down in Florida. Yesterday, I enjoyed myself at the Animal Kingdom, spending time with my wife. But today, I spent the entire day in my hotel room, focused on the markets, because we obviously had our CPI report, our consumer price inflation report come out. And of course, it was a disappointment, and it sent the markets reeling. We saw the core inflation doubled from 0.3 to 0.6. We were hoping that it would drop. The market, I believe, had priced in the idea that it was going to drop. And so this was the absolute reversal of expectation. You know that the markets do not like to be taken by surprise. And as a result, the markets sold off. We got a lot to consider here and a lot to look at and to contemplate. What are we doing with our trades? I had to make decisions all throughout the day. One of the things that happened today was the TQQQ. It dropped 13.5%, and the SQQQ went up 13.5%. Now, we made good profits on the TQQQ Friday and Monday. And even though I didn't shoot a video yesterday, as I was walking around and waiting in line at the long Disney rides, people asked me, Josh, what are you doing with your TQQQ? I told everybody who asked me that I was selling at the end of the day, Monday, because I did not want to hold it going into the volatility that this report could potentially produce. I also sold my Norwegian cruise lines. Even though I believed that there was still some meat on the bones, it had just gone up so well that I just thought, let's take some profits on that as well. So what was in this report? We saw that food and housing has really continued to rise steadily. Now that's on the headline side of the report. We also saw that shelter went up, which is the rental part of the report. The bottom line is that the inflation is still not under control, and this is a problem for the markets. And it's sent a lot of people making decisions this morning and through the rest of the day with their investments, with their trades, switching from going long in a lot of cases to going short. So who does all of this really hurt? These rising costs of food, shelter, housing. It hurts the working class. It hurts the everyday guy. He's out there trying to make a living, trying to get to and from work, and every area of his life, prices are going up. Why are these prices going up? Well, we already know the answer to that. In the last 2 years, our government has created 40% of all the money, all of the United States dollars that have ever existed were created in the last 2 years. And whenever you create that much money and pump it into the system, one, it's extremely good for stocks. Initially, it'll cause companies to have awesome record profits. And we saw a lot of companies have awesome record profits, but it gets out of control and it trickles down into the economy so that all of the costs of goods begin to go up. That's where the Fed comes in, and he's kind of the bad guy to a lot of people because he's the one causing all of our investments to go down. But if he didn't, we got to remember that we'd be spending $100 for a gallon of milk. And so you ask yourselves, why is inflation still going up? I thought that what the Fed had done might have slowed the rise of inflation. That's true. What the Fed has done, the aggressive interest rate hikes that we got, 2 75 basis point hikes, one after the other, absolutely are working. But guess what, guys? We have a government that's working against the Fed, because what did we also do in the last 2 months? We did tons more government spending. We threw out $30 billion on the chip bill, which I know that people say, well, hey, Josh, the chip bill's good. Yeah, the chip bill is going to allow us to manufacture more chips here stateside and be less dependent on the rest of the world. But you got to remember, that's what a free economy is for. If these companies want to do that, they need to take their record profits that they've made in the last 2 years because of all the other spending that was done, and they need to invest in the U.S. They need to invest in putting chip plants here in the U.S. But instead, we, the taxpayers, gave another $30 billion to these corporations to bail them out because of their lack of proper preparation and proper spending. And now it's causing inflation to continue to rise. In addition to that, we had the government forgive an untold, uncalculated amount of student debt. And you know what? I have a daughter who recently got married, and her husband had some student debt that came into the marriage. And you know what? They called me up and they said, Dad, guess what? Good news. Jason's student loans have, this much money, the student loans have been forgiven. And I celebrated with them because I know what a big impact that is to be free of debt. So I get it. But at the end of the day, the government's spending when they've already spent. And this is going to continue to lead to a rise in inflation. So how did the markets react? Basically, they sold off. And I want to talk about some key data reports that came out today. Goldman Sachs came out and revised their Fed's future rate prediction from, it had previously been, people had been debating whether it was going to be 75 basis points or 50. Well, Goldman Sachs came out and said, no, it's going to be 75 basis points, and then it's going to be 50, and then it's going to be another 50. Where previously people had predicted that it would be 50, and then 25, and then 25. It would have previously put us at 3.5% by year end, but now this upward revision of an increased Fed funds rate brings us to 4.25% by the end of the year. I'm gonna tell you guys right now, 4.25% has not been priced into equities yet, and so that brings us to the point of seeing a pretty strong pull down at these levels. Followed up by Goldman Sachs report was Bank of America going out and saying that we're going to begin to see layoffs. We're going to begin to see a rise in unemployment beginning at the end of this year and running all the way through till September of next year. We know that these pressures on the economy, the unemployment, as well as a decreased GDP, means that we are absolutely in a recession. The question is whether we're in a soft recession or a hard recession. But this type of reports that keep coming out is compounding the bearish sentiment that we're looking at right now. So what type of trades are going to work moving forward? I think that the energy sector as well as healthcare are going to continue to perform well. And we're going to see that growth and tech are going to continue to get punished. The question is, when is all that going to happen? And I still am imagining that between now and midterms, we're going to see some sideways movement, and I think even potentially a little bit of bullishness. And then after midterms, I'm still imagining that's when we're going to see the really hard selling. I don't know that for sure, but that's kind of where my mind is at. I just want to go over some of my trades. If you guys have not been following my channel, hit the subscribe, hit the notification bell so you can be actively involved in my day-to-day trades. On the MooMoo app, which is at the top pinned comment as well as the description, I have a community there as well where I'm able to text back and forth. And I will tell you guys, a lot of you know that you ask me about stocks and I do my best to respond. I may not give a lot of detail, but I will give you very precise technicals when I can. And it's some of you guys that have asked me about specific trades that I'm in. I've given you on-the-spot answers. So if you want to be part of my community, then download the MooMoo app, open up that exchange. They're giving away 13 free stock. You can spin for the stock and you can win a stock that's valued anywhere from $10 to $2,000, and you've got 10 of those to potentially win. So get that free money. So we know the recession is coming. The question is how soon? And at the moment, I really believe that we're going to see some heavy pressure on these markets beginning after midterms and running through the first quarter and possibly the second quarter of next year. And I believe that we will be largely through it by the middle of next year and on a new move up. That's currently what I'm seeing. But I want to tell you where the perfect storm of bearishness for this market could possibly come from. It's going to come from oil. Oil is pulled back and it's on a nice low. For many people, it's the perfect point to begin to reinvest in oil, driving the price of oil back up. And I want to talk right now, but again, another government decision that could really bite us all is the fact that Biden opened up and the reserves, America's oil reserves. So just let me explain to you for a moment what that is. America the government, the military has to have their own reserve of oil in case the world were to go into some form of a chaos or a war or some sort of global shortages. We would have a stockpile to keep ourselves running and operating and to prevent us from getting into a dangerous place where we didn't have the resources we need. Well, this has often been used by presidents when oil prices have gone high. It's been used as a relief valve. Well, Biden sort of opened up that relief valve, but the problem is it's been open quite a while. and we have been using up that oil so that the reserve is its lowest since the 1980s. Well, here's where things could go pretty bad for us. At some point, they're gonna have to replenish those reserves. And if at the exact same time as we're moving towards winter, we have oil shortages or, throughout the world, we could find ourselves competing with the United States government trying to refill those reserves, causing the price of oil to skyrocket, which obviously that would then coincide with the cost of food and housing. And we would just see that it would be the nail in the coffin. Oil would be going through the roof, and we'd see inflation hit brand new highs. Now, I hope that doesn't happen, but it's definitely something that we have to keep our eyes on. You guys can follow me with my trades. You can talk to me in the comment section. You know that I'm about building community. I don't put you guys off. I don't not answer your questions. You guys ask me questions. I put myself on the limb and I give you answers. So you can join my community over on MooMoo. You can find me by searching under the Explore tab on the bottom right, Stocks with Josh. I also want to quickly thank a lot of you because I entered a competition on MooMoo for best YouTube video. And right now, because of all of you guys, I'm well in the lead against some other really great YouTubers. You guys have made me #1, and I appreciate that. You know, I always tell you guys, I love you. I appreciate you sharing this journey with you guys. Hit the like, hit the subscribe, say hi in the comment. Let me know if you bought or sold TQQQ, SQQQ, or any of our other trades today. I'll see you guys on the next video. Peace and blessings, my friends. Take care.